You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. You know, every time I listen to that intro, I feel like at the end I should pop out of a cake or something, but anyway, thanks for joining us today, whoever you are, wherever you are. We're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast is our live training room, so that's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, go to mytradingiq.com. And at the very top of the page, you'll find a very large purple button. Click it, fill out the form, hit submit. We'll get you indicators indicating today. So you'll have the weekend and the holiday Monday to kind of get familiar with the indicators. And then your trial will officially start next Tuesday. But you're going to get 5 consecutive trading days. So what a great time to take the trial, because this weekend and the holiday doesn't count against you, nor does next weekend. So yeah, there's never been a better time to take the trial if you haven't taken it yet. Okay, that's important. All right, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the noon broadcast, which, unlike the morning broadcast, is open to the public. I'm talking everybody everywhere on planet Earth with an internet-connected device. There could be people on other planets, I don't know, that have an internet connection. Maybe Elon will find out someday and let us know. Now, the best way to join this broadcast, the afternoon broadcast, there's two ways, but the best way, go to mytradingiq.com, scroll down the page to where it says noon broadcast. Click that link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before this broadcast starts. In that email there's a link. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. The benefit of doing it that way is you have immediate access to the question box. So you can ask questions and participate in the discussion. Of course, there's going to be days when you're out of the office, away from the desktop, maybe you're on vacation, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. It's the Christian Financial Radio Network, but you don't have to remember all that. Just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it is a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've developed over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to. But it lets you know we've been around a minute, and it's just a great resource to have at your fingertips. youtube.com/CFRN. This is our schedule for each afternoon broadcast. About the top of the hour, Michael will join us, and he'll give us a recap of what happened in the live training room this morning. Then we'll do some live trading on the TradingView platform for about a half an hour. And then we'll wrap it up with our good word for the day. But right now, we're going to dive into our daily devotional. And the topic we're on right now, and we're on day 3 of 5, at his feet, choosing what's best in a busy world. Today's scriptures, John 10, verses 6 through 10, and I'm sharing it from the Message translation. Jesus told this simple story, but they had no idea what he was talking about. So he tried again. He said, "I'll be explicit then. I am the gate for the sheep. All those others are up to no good. Sheep rustlers, every one of them. But the sheep don't listen to them. I am the gate. Anyone who goes through me will be cared for, will freely go in and out and find pasture. A thief is only there to steal, kill, and destroy. I came so they can have real and eternal life, more and better life than they ever dreamed of." Again, that was John 10, verses 6 through 10. So, day 3, life to the full. Jesus longs that we'll live our lives to the full. He truly does. But that abundant life he speaks of is, of course, so much more than simply lip service on a Sunday or our well-rehearsed prayers. Instead, it's about honesty and wholehearted surrender to Him. When we get to this place, it means we truly understand that we too are choosing what is best. We too are understanding that there is nothing else that compares to a moment at the feet of Jesus like Mary had, as we explored yesterday. And of course, it's not just Mary. The psalmist echoed this sentiment in Psalm 84, verse 10. In this verse, we hear a similar refrain, a sentiment which suggests that a seemingly low position before God is still better than the highest, most noble position there is without Him. The familiar "my God" in this verse instantly speaks to me of relationship. This is not the God, a God, or even just God. This is my God, my Father, the one I cling to. When we cultivate relationship and are in turn reminded that God is in no way distant or far off, we too recognize that our acts of service are only ever going to play a small part in the much, much bigger story of surrender. The Word of God is one of the most crucial places within which we, God's children, truly get to understand how wonderful this truth really is. It's within those pages where we recall and remind ourselves of not only who we are, but also whose we are, which is ultimately more important. We will never understand our identity, our calling, our purpose, all of the things we often seek to understand first, until we're able to understand He whose image we have been created in. Psalm 37:4 says, "Delight yourself in the Lord, and He will give you the desires of your heart." Now I've heard that mispreached so many times, I can't even begin to tell you. The part about He will give you the desires of your heart, that doesn't mean tomorrow morning you're going to wake up and find a new Cadillac in your driveway. What it means is God is going to put His desires into your heart. See the difference? This often quoted verse is so often misquoted. We can read this and sometimes find ourselves believing that it's saying that God loves us so much He'll give us whatever we want. But when we pause and think, we realize that our human nature sometimes desires things which ultimately are no good for us. Real love, indeed, God's love, gives us the things He desires for us. But the beautiful truth about that is, the more we get to know Him, the more we delight in Him, as the scripture states. The more our desires line up with the things He longs for us to have anyway. And I'll leave you with something you can put in your journal. What does it mean for you to delight yourself in God? What are practical ways in which you do this? For me, I'll just be honest. When I go to church on Saturday afternoon, I worship. And that's when I feel so close to God. Now, God's with you all the time. You don't have to go into a building made of stone by man's hands. But when a group of believers gather together and there's awesome live praise and worship music going, I can't keep my hands down. There was a time in my life when I couldn't raise my hands But I reached a point in my relationship with God where suddenly one day I couldn't keep my hands down. I tried stuffing them in my pockets, but as I listened to the lyrics of the worship team, up go the hands. Pretty soon, the feet start shuffling, tapping my toes. I don't know. There's a lot of great praise and worship music out there, so you don't even have to go to church to listen to it. On YouTube, go to Elevation Worship. Listen to some of those beautiful songs, and I believe you too will get happy feet. Let's pray. Good Shepherd, thank you for being the gate through which we find safety, purpose, and life. Guard our hearts from the thief who comes to steal and destroy, and lead us into the abundant life you promised. Help us to listen for your voice and follow you faithfully each day. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Friday. Markets aren't so happy. President Trump, I think he woke up a little ticked about something this morning. But boy, did he move the markets. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 293 points. The Nasdaq's down 205, just over 1%. S&P 500 is down 48, almost 1%. And the Russell 2000 down 12 points. And the thing that we've been waiting for patiently, day after day after day, has finally happened. And I'll show it to you when we go to the charts. In the commodity basket, crude oil up 30 cents, trading 61.50 last. Gold up $62.70, trading 33.5740 last. That's a gain of almost 2%. And silver is up 22 cents, trading 33.45 last. In the Asian markets, at the close, the Nikkei gained 174 points. Shanghai dropped 31, and for the Shanghai, that's almost 1%. And the Hang Seng added 56. In the European markets, at the close, FTSE down 21, the DAX down 369, 1.5%. The CAC down 130, over 1.5%. So we had a mixed day in Asia. It was a red day for the UK. And so far, it is a big red Radio Friday here in the US of A. And as I go through the news, you'll understand why. And I also want you to understand we're technical traders. So through technical analysis, we have a very good idea of what's going to happen before it happens. What we needed was simply something fundamental, like what Trump posted this morning, to provide the impetus for the market to actually move and do the technical thing we expected it to do. If that sounds confusing, well, we'll talk about it a lot. John, yes, I love that song too. Elevation, Million Little Miracles. That is one of my favorites, along with The Blessing. But I like them all, I think. And they dropped a new album last Thursday called Sons of Sunday. Gotta listen to it. Okay, in the news, what do we got? House passes big, beautiful bill. House Republicans passed a broad domestic policy bill early yesterday, by a 1-point margin, 215 to 214. Following overnight negotiations and last-minute changes to the legislation, the so-called One Big Beautiful Bill now heads to the Senate, where expected tweaks may result in a back and forth between the two chambers. Come on, guys, just get it done. A suspect was charged with 2 counts of first-degree murder and murder of foreign officials after killing 2 Israeli embassy staffers outside the Capitol Jewish Museum in Washington, D.C. this week. The 31-year-old assailant, who is believed to have acted alone, shouted, "Free, free Palestine," after firing at the victims at close range. More charges are expected as officials investigate the act as a hate crime and an act of terrorism. A penny saved is a nickel earned. You never heard that before, did you? The U.S. Treasury announced yesterday it will stop issuing new pennies, ending more than 200 years of production for the 1-cent coin. The Mint has already placed its final order for penny blanks, the metal disc used to create coins, and will continue minting until that supply runs out, likely in early 2026. Consumers can continue using existing pennies, but as circulation declines, banks and retailers will likely round cash transactions to the nearest nickel. Digital payments will remain unaffected and will continue to be processed to the exact cent. The decision is largely driven by cost. Each penny cost about 3.7 cents to produce, resulting in an $85 million loss in 2024. Treasury officials estimate the move will save $56 million annually in materials and manufacturing. However, the nickel, which costs 13.8 cents to produce, may see increased demand, potentially cutting into the anticipated savings. Well, if it costs almost 14 cents to produce a nickel, then we should probably just stop that as well. But they didn't leave me the keys to the office, so. All right, Wall Street, U.S. stocks fell today on pace for weekly losses as investors assessed President Trump's latest tariff threats and what his giant tax bill means for the deficit and the economy. Trump said on Friday, today, that Apple must pay a 25% tariff on iPhones sold but not made in the U.S. The tech giant has begun shifting some manufacturing to India, with China, home to its key suppliers, locked in a trade war. U.S. Apple shares fell 3% after Trump's post on Truth Social. At the same time, Trump threatened to hike the tariff on EU imports to a straight 50% beginning June 1, as trade talks between the two have stalled. Now, they're playing a game of chicken, and I don't think Trump's going to flinch. So, we'll see what happens. Social feeds are filled with recession indicators. In fact, it's a hashtag, recession indicators, ranging from the delightfully absurd to the quietly astute. But the urge to find out where the economy is heading before definitive findings is a powerful one. Retail sales, commentary from big box companies, and debt loads all contribute to an understanding of the health of the U.S. consumer. New financial products can also offer fresh insight. Klarna, the buy now, pay later lender, reported this week that consumer credit losses rose 17% for the first quarter compared to the same period last year, and that even as revenue rose to over $700 million, net losses doubled to $99 million. Now, I'm just going to say this. If we slip into a recession after all this current administration is done, that recession will be called the J. Powell recession because of his stubbornness, and refusal to lower rates. Moving on, sales of new U.S. single-family homes unexpectedly increased in April as builders lowered prices to lure buyers, but rising mortgage rates and an uncertain economic outlook remain constraints for the housing market. New home sales surged 10.9% to a seasonally adjusted annual rate of 743,000 units last month. That's according to the Commerce Department's Census Bureau. The sales pace for March was revised down to a rate of 670,000 units from the previously reported 724,000 units. Economists polled by Reuters had forecast new home sales, which make up about 14% of all U.S. home sales, declining to a rate of 693,000 units. Now, speaking of recessions, Canada's economy is likely in the early stages of a recession, according to forecasters, as unemployment rises and exports fall because of the trade war with the U.S. Economists surveyed by Bloomberg say output will shrink 1% on an annualized basis in the second quarter and 0.1% in the third quarter. That makes it a technical recession. You know, I don't know why Canada's being so difficult. We hold the cards. And now they're the people, not the government, the Canadian people, they don't deserve that. So, I would say write your congressman, but I guess, I don't know who you write in Canada, but somebody should write somebody. Oh, and did I mention Jay Powell should lower the rates? Okay, good. A surprise half-point rate cut right now would turn everything around. Okay, next, unhappy that Apple intends to source nearly all of its U.S. iPhones from India. President Trump today threatened a 25% tariff on the popular devices unless the tech giant moves production to the U.S. But Apple has seen little incentive in the past to manufacture domestically. Well, Trump just gave you a real good incentive. So, get after it. It's time. Okay, on the home front. Logic 247. That's our 24/7 around-the-clock E-mini alert service. Not just E-minis, but also crude, gold, and silver. We're currently in week 355, and over the last 355 weeks, we have issued over 19,700 individual handcrafted alerts. I think it was last night we crossed over to 19,700. So Valerie did the recap this, and what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. That was before the big drop came at 7 a.m. Eastern. So this will probably change somewhat drastically, I think, and I hope for the better, when she finalizes the recap this afternoon or early evening, as she does each Friday. So at the time she did the recap, Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 61 alerts, 2 never triggered, still waiting on 21. And that big drop that came 30 minutes after she did the recap, I think that's going to change this number considerably. We'll see. So that gave us 38 actionable alerts, of which 5 or 13% would have been stopped out. Again, based on simple market structure and the simple process we teach all of our passport holders. Now, every logic alert has an entry price, an initial target designed to help you get your goal for the day, and then usually quite a few additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Remember, we don't go to work Monday morning at 9:30. We go to work Sunday night at 6 p.m. Eastern. Okay? So the logic alerts can come out anytime around the clock. Of course, yes, you can trade them. I don't want to stop you from that, but I want to make sure that you're using them for the real purpose intended, and that's to help you learn how to read a chart. And you say, well, I know how to read. Okay, but when you look at a chart, there's no words, paragraphs, sentences, punctuation. It's a whole different language, and you've got to learn that language. You've got to learn to understand how price flows, how to spot potential resistance and potential support, and uncover the windows of opportunity that lie in between. So, again, so far, we had a great week. I think last week we ended up with 7% stop down. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. And they're different. I'll show you. The CTAs do not come out around the clock. They're published 5 minutes ahead of the Globex Open, except on days when I'm not able to. But I try to always put a note in the discussion group to let you know to expect them at 5:55 p.m. See, the Friday session began last night at 6 p.m. Eastern. So all of our members and all of our trial members had all of these targets 5 minutes before the market opened. The S&P 500, the Dow, the Russell, crude oil, the NASDAQ, gold, and silver. So as we go through the charts today, just remember, these targets were posted 5 minutes before the open. And with that, we can actually go to the charts. My favorite part of the day. And look at that big, beautiful pullback to the BBC. We've been waiting and waiting. We thought we were going to get it back here. Price always reverts to the mean. In our case, the mean is green. We call it the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Now you'll notice that the pullback to the BBC holds more often than it doesn't, whether it's pulling down from above or pulling up from below, like that, like that, like that, like that. Now, even though the pullback holds more often than not, we know eventually it's going to trade through, as it did on February 21st and as it did on April 24th. Not only did we get our pullback to the BBC, but we also got what we were hoping for, and what typically happens is we've bounced. We had a red candle all the way down right to the BBC, and this is how much it's bounced since touching it. You'll notice that red and falling has not showed up on this pullback. That means there's a good probability, or a higher probability, that we're actually going to put in another leg to the upside. Now coming down, it was like this: leg retracement, leg retracement, leg retracement. But right here, when we fail to put in a lower low, we have to start looking at it like this: leg retracement, leg retracement, leg retracement, leg retracement. And so far the pullback has held, even with all that horrible news I shared with you. But you see, we've been expecting this now for over a week. We've talked about it every day from a technical perspective. But this morning, Trump's fundamental post on Truth Social provided the impetus to fulfill what we had anticipated technically. Now, daily charts are important. I know you don't trade them. Well, most of you don't. But the institutional traders, the deep pockets who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, spend 2 minutes with the daily chart of whatever you're about to trade before you start trading on your smaller time frames. Whether it's stocks, futures, crypto, Forex, ETFs, look at the daily chart for 2 minutes. Number one, it gives you a free look over the shoulder of the deep pockets that move price. And you should have been anticipating this bounce once we touched it, because that's what typically happens. Okay. And we're now able to identify major areas of resistance: the black step line overhead, and then blue and climbing. Because those are both directly above price, they now serve as potential resistance. If for some reason the market unwinds and we trade below the BBC, support here at the 62% reverse fib, then this area right here, and then the 50, and then right here, the bullish cross. When the blue line crosses the green line, that's called a bullish cross. And when it leads to an extended move like this, the first time price revisits that area where the bullish cross took place, the market will almost always find good support the first time down. Now, if we continue higher, that won't be important. But if something happens, if there's more posts from Trump and institutional traders start throwing in the towel, price falls faster than it rises. It takes financial commitment for price to rise. But for price to fall, all that's needed is for the institutional traders to sit on their hands. Hit pause on the buy side. So, try it. Spend 2 minutes with the daily chart, then go to your normal routine. And I think over the period of a month, you'll see a difference. Okay, all alerts are created on the 30-minute chart. The Logic 247 alerts and the Concierge Trade alerts. Remember, all of our members and trial members had these targets 5 minutes ahead of the open last night. The vertical line separates today, Friday, from Thursday, from Wednesday. These are the weekly trading zones. They're published every Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. And it's been that way for almost 15 and a half years now. Next month we'll make 15 and a half. Last night during the members only workshop, at the very end of the workshop, I drew in this because I said I don't think this is where price is going, but if it does, this is your trade. Okay. I also drew in 2 short windows of opportunity. And as you can see, we filled the window and hit the short target. Support bounced us up to resistance. These highs right here. See them? Okay. Which then sent price back down to fill the window a second time. Now that window is roughly $58.48 to $58.44. So that's a 4-point window of opportunity. Support bounced us up to the BBC, the pullback held, and then down we come, filling that window a third time and also filling this window. We went below the lowest weekly trading zone. We've now bounced back to the BBC. So far the pullback is held, but we do have blue and climbing here. So I think this just might be a day where we see price trade through the BBC on the 30-minute chart. So members, if you missed last night's workshop, it was a great workshop. I think you should watch the whole video. It's in the private Telegram channel. Michael did a deep dive on a lot of his work, and I did this at the very end of the workshop. I drew them in, and now you see the results. 1 fill, 2 fill, 3 fill, and now this big window was basically 58.38 down to 58.30. That was an 8-point window of opportunity. This is why you need to learn to read the chart. I explained it in detail as I was drawing these windows, and I explained the reasons why as I was drawing them. So if you remember, and you weren't there live last night, try to watch the workshop over the weekend. I think you'll find it enlightening. I hope you will. The Dow opened right here. Now let me go back. Okay. On the ES, this was the opening candle last night. Now when price is below the BBC, we expect lower prices. So this candle right here, it opened at 58.62 and dropped to 58.61. That's 11 points in one 30-minute candle. Now if your goal is 2 points a day, that's a whole week's worth of work right there. And that one big beautiful red candle. Now the market did find support right here. You see where red turned to blue? It's a beautiful thing. Support bounces up to resistance. The pullback held. Okay. Get the idea? All right. So the Dow, first opening candle closed below the BBC. This candle opened at 965 and dropped to, we'll call it 970. So from 965 to 902, it's like 60 points. You only need 20 points to get your goal for the day. And there was every good reason to take that trade. So anyway, support sends us back to resistance, which drops us down to support. We almost hit the short target on that candle, but not quite. The market found support. This low is just below this low. We spiked it a little bit. But this candle opened at 921 and dropped to 844. That's what, 80 points? So we bounced, and what do we got? A quadruple top up here. You should expect that to be resistance, and it was. And this time it sent us all the way down to the short target support, which was based off this, where red turned to blue. So we bounced back up into red and falling resistance. That took us down through the short target and all the way down to the lowest weekly trading zone, 41,355 / 41,360. But now we're well above it. See how red and falling has curled up? See, when the step line crosses red and falling, see on the way down how it's on the left side of red and falling? Once that step line crosses red and falling, we expect a retracement to the BBC, and that's what we got. And because we have blue and climbing chasing price, I think just like the ES, we're going to trade through the BBC. But you have potential resistance right here, and then right here. When price trades through a long or short CTA target, in this case a short one, and price retraces, it will likely find resistance right there. Okay? And I think we're going to trade through because we got blue and climbing chasing price. On the Russell, this was the opening candle. We were above the BBC. We had red and falling overhead. Price was kind of trapped there. But you might not have taken advantage of that. You could have got in here around 49, and we dropped to, 47. What was the low? 47. Yeah. So there was a couple points to be grabbed there, and that's good for your goal for the day. Now, why did price find support here? Previous bullish cross. Blue line got above the green line. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. That bounced us up, and then things got a little convoluted. And we started to make a move down to the lowest weekly trading zone, but we found support right here. Okay, support sends us looking for resistance, and I think we stalled out here just due to weak knees, and then of course that was the London open there. But this big huge red candle you see, that was during the 7:30 hour. It started at 7. That's when Trump put that post out. And as you can see, we've traded well below. Look how far he dropped off a post. But he is the president. We actually have a president. That's so cool. Now, price has already traded through the BBC. Remember I mentioned on the ES and the YM I thought it would? Because blue and climbing is chasing price. So we've already hit the lowest weekly zone twice, and it's served as resistance. By close of business today, we expect, based on 15.5 years of history, that price will be at or above the lowest weekly trading zone. In Q, this was the open last night. We opened, we immediately got below the BBC, and this candle right here. This one opened at 192 and dropped to 139. That's 60 points at $20 a point. That one candle is worth $1,200 per contract traded. And why did the market find support there? See where the step line crossed red and falling and turned it to blue and climbing? That's the reason. Support sends us to resistance. The pullback held, sent us back down to the short target. We spiked it a little bit, and then we made it almost all the way back to this weekly zone. This was the London Open right here. So we missed it by just a little bit. Now with the weekly zones, when price moves up to a zone, we expect resistance. When it drops to a zone, we expect support, until proven otherwise. When price encounters a weekly trading zone, only one of three things happens. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. Now you see how this candle, this 30-minute candle, sliced through the weekly trading zone like it wasn't even there? When that happens and the move runs out of steam, price will typically retrace to the zone it sliced through and continue in the direction of the slice. That's so beautiful. That probably sounds a little weird if you're not a trader, but it's a beautiful thing. Support sends us to resistance. The pullback held. Sent us back down to the short target. And we spiked it. And you know what? Sometimes the market does not do what we expect it to do. We don't claim to know what's going to happen next in the markets. I know you go to websites and get emails where everybody knows tomorrow's headlines today. Blah, blah, blah. They lie. Nobody knows what's going to happen next in the market. Except God, I guess. He doesn't figure into the equation, okay? Now, God will not move the markets for you. If you're in a bad trade and it's going against you, you can get on the floor on your hands and knees and wail and say, please God, turn the market around, and I'll never trade again, or I'll never make that mistake again. He's not going to do it. Why? Well, because there's millions of other believers around the world who took that same trade in the opposite direction. So he's just going to wipe all of them out so you can have a profit? No. Where God comes into the picture is when you pray and ask the Holy Spirit to guide you in the learning process. Remember, of the 19,700 plus alerts we've issued, 20% or less get stopped out. And that percentage has held true for 355 weeks. So when the market doesn't do exactly what we thought it was going to do, we don't worry about it. We don't fuss over it. We don't go back to the drawing board. We just look for the next opportunity. Okay? So support coming in right here, that's part of that 20%. But the support did take us almost back to the zone, and then resistance sent us back down through the target, and this low is this low. So up we go back to the BBC and the pullback holds, and then Trump made that post and the bottom fell out. This is the lowest weekly trading zone. Again, by close of business today, we expect price to be at or above the lowest weekly trading zone. Is that you, Michael?
It is me. It is me. If you want to do silver, that's fine. And then,
well, I've still got crude, gold, and silver, so I could just let you go ahead and take over. Yeah, I guess I was going a little slower today.
Okay.
Guys, we'll pick up with crude. We hit our long target and our short target. Oh, I wanted to show you, Michael. Remember at the end of the workshop last night?
Yep.
Filled once, filled twice, filled a third time, and then this one filled. Is that a beautiful thing?
Sweet. It is. It is a very nice thing. And look at that retracement. This
Yep.
is,
And I think we're going to
I,
trade through the BBC because we've got blue and climbing chasing price. So,
right.
and we're
Um,
bouncing off the daily BBC. So,
mhm.
okay, let me put it back on crude and then let me shrink this down. Guys, we'll finish recapping the other markets we haven't gotten to yet when I come back. But right now, Michael is going to give us a recap of what happened in the live training room this morning.
Okay.
And then we'll do some live trading on the TradingView platform. And when I come back, I'll finish things up.
Okay. When you finish things up, I thought, it was going to be like a normal day. And I scheduled this room for 2:00. So I'm going to get my stuff done. And so you can get back and get your stuff done by 2:00, if that's okay.
Well, that's an hour from now, right?
Yeah. Yep. Yep.
Well, it'll once you're done at the bottom of the hour, it'll only take me like 15 minutes to be completely
Okay.
finished.
That's what I figured. I just wanted to, because I don't want to
I
kick
got
you out like I did last night by accident.
no worries.
All right. Here we go. Coming over to my side. All right.
Okay, let me get this centered. Okay, looks good.
All right. Man, I did something yesterday. I'd never really thought about doing, but I have out of my. I'm just going off topic here. Because during the break I just cooked a whole bunch of stuff on it. But I have out of my outdoor kitchen area there. I have 2 grills and a smoker, and the inside of my favorite grill, the inside of that was getting all kind of run down looking.
Yeah.
So I bought all the new stuff, like $65. I bought everything to replace everything inside of it, and I replaced it all, and it is like a brand new grill. It is like perfect.
Awesome.
It is awesome. It's incredible. And
You'll have a fine grilling Memorial Day.
I will indeed. I used it last night. I cooked chicken on it last night, about 5 pounds of chicken last night, and then 3 pounds of bacon during the break here today. So it was all stuff that I do for Phil usually.
My wife's got 2 grills and a smoker. She really enjoys the process. Me, not so much, but anyway.
Yeah.
Okay, it's all yours.
Okay, here we go. All right. Here we go. Good afternoon, everybody. Today is Friday, the 23rd day of May, 2025. If you have not taken a free trial with us, go ahead to mytradingiq.com. Click on this purple button right here. I believe I updated that. Yes. That is going to bring you to this page. There is no credit card required for the trial. Okay, that says it right there. No credit card required for the trial. Click on that. It's going to bring you to here. Just fill out this form. Down at the bottom, all we need is a TradingView login ID. First name, last name, email, and phone number would be nice. Fill out the multiple choice questions. Please fill them out honestly. Okay, if you're not a partner, obviously, if you've taken the trial, let us know. And what you like to trade. It's all good stuff, right? It helps us tailor things to you. Once you've done that, you'll be sent everything you need to get into the room in the morning. Okay, so this morning I spent a lot of time talking, and we focused on one market for a little while where I didn't trade all that much, and it was actually the ES that we focused on. That's when I got the least amount in. But we did stop out 3 times on it, twice while I was doing all the talking. But this is what we ended up with, $1,060 per contract this morning. Okay. So if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I mean, 28 ticks on the NQ, 15 ticks on the Russell, 77 ticks in gold, and 6 ticks on the ES. Put us at $1,060 on the morning session. Today it took 7 minutes and 1 trade to get to the goal for the day. At that point, I was up $1,200 with 10 contracts. And we took 24 trades today. So on the month now, we're at 17,182. I wanted to get to 20,000 by the end of the month, and we are well on our way to that. All right, just gonna make $3,000 over the 4 days next week. That should be good. Over 15 days, we're averaging $1,145 per contract per day, and we are at an even $137,000 on the year right now with 1 contract. That's over 87 business days, averaging $1,574.71 per day per contract per day. That is interesting. Anyway, following the 24/20 blueprint, if you were to add 1 contract per month, quitting when you get the goal for the day, so far this year, you would have only had to work 11.28 hours, and you'd be up $42,622, averaging $3,777 per hour. Look at all those 7s in there. 7s over there and 7s there. That's lucky numbers, 87, 87. That's a good thing. Anyway, get into the trades, right? We had, oops, this is wrong. This was from last night's partners meeting. I want to encourage anybody that went to last night's partners meeting, if you want to look at the charts from the meeting, go here to mytradingiq.com, click on trade rules, and it's this bottom link right here, right? The NQ chart is what I used in the meeting. That's this right here. Right, you have to scroll back to yesterday. If you hit Alt and hold the back arrow like that, you can go back to when the meeting was yesterday. And if you just want to reference it, I mean, you can just watch it all obviously in the video, and the video is out there now. I put the video out there, but this is what we were talking about last night. All this stuff right here, right? This was the one chart that I used if you want to go and reference it on your own charts. But back in here. Let's see, what do we do the least on today? The Russell. So on the Russell today, we only had a couple of trades. We had, were they both weird trades? They were both trades that I kind of messed up. We took a trade right here. We got 10 ticks in profit on that one. And the reason I messed that up is because I didn't see that this here had happened. It didn't go into the overbought when I took it aggressively right here, a long trade aggressively right there. And I ended up getting 10 ticks out of it. And the next one was over here. And I have an odd color on that because I took that aggressively, but I took it on this close right here, right? And ended up getting 4 ticks in profit. There's something I did on that. Oh, I did the math wrong when I was doing it. That's what it was. I did the math wrong, right? I didn't take it aggressively. I took it conservatively, but I did the math for a 10 range, for a 9 range instead of a 19 range. So I entered 10 ticks early and I got 5 ticks out of it. If you would have entered at the right place, you would have gotten more because you would have gotten 10 ticks into profit down here. You wouldn't hit break even like I did. When we got down to here, I'd hit break even and then I bumped it to 5 ticks and it took me out with 5 ticks when I pulled back up because my entry was up here. Okay. If you entered at the right place, which was right here, you wouldn't have bumped it to break even yet because it didn't get to the break even point till down here. And then it ran all the way down there. So you would have gotten a lot more than me out of that trade if you did it the right way. But I messed that one up. That's why I have those 2 odd colors on those candles. It's on your Father's Day wish list. Wait till you see what I got for my dad for Father's Day, John. I'll show it to you when it's done, when it's ready. I just got a proof of it today during the break. They sent me a proof. A place in Canada is making it. I wonder if the tariff's going to be on that. Doesn't matter. We're going to pay for it. Let's see. On the Russell, there was a decent trade right here that I didn't do. It looks like probably another pretty good trade right here that I didn't do. What I'm looking at here is the leg length. If I get rid of this, I'm looking at the leg length, right? This was leg length up. This was the pullback in the midpoint of that. This was leg length down. This was the pullback in the midpoint of that. This was the leg length up. Now over here was where the trade would have been, and that was a good spot for a trade, right? After that, much during the break here, but that was the Russell. We only had a couple of trades on the Russell. We ended up with plus 15. Now the NQ was the next least traded market. It used to be the NQ was one of the most traded markets, but today I spent so much time on the ES, I didn't get to trade much else. And that after 17 trades, he's up $3,555. Sweet. Okay, that just came up on my phone. He just texted that to me. On the NQ right here, our first trade, we picked up 16 ticks. Then our next trade, all the rest of them were small. We picked up 4 ticks there, 4 more there. And so we went from 16 to 20, then to 24, then from 24 we went to 28. So there was one more 4-tick trade in here somewhere. It might have been in here. There was one more 4-tick trade, and I ended up with 28 ticks on the NQ. I didn't trade the NQ much today. It's not that there weren't a lot of trades. It's just that I wasn't watching it. Okay. And I'll do gold. I'm going to do the ES last because we spent the most time on the ES. Right. So I'll do gold right now. And here is, come on. Here's the gold. Now gold is where we got the goal for the day on the very first trade right here. Is that it? Yeah, that was it right there. We picked up 12 ticks on that trade. Then we had a break even. Then we picked up 25 ticks on that to get us to 37. Then we had 15 there to get us to 52. Then we had 4 there to get us to 57. Then we had 5 to get us to 62. And then 15 to get us to 77. And that was it. That is where we wrapped it up. As it continued sideways, we didn't take any more trades. I mean, we were looking at it, but I was doing a lot on the ES, so I wasn't watching these other markets all that much. Just looking at it like this, if you don't even put anything on it, right? If you don't even put anything on it, this was a good move up. This was the pullback of that move up. This from here up to here, it dragged out a little bit, pulled back a couple of times in between, which would have given you trade setups on the way up, right? But from here to here is the leg length. From here to here is the same as this one from here to here. I didn't do any measurements, but I think that that's about right. From there to there is roughly from there to there. That's what I was saying. So inside there were a couple of trades, one there and one there. And within that spot right there, from here to here, this is a 50% retracement. From here to here, this is 50% retracement. From here to here, not quite 50%, but pretty close. If you were aggressive, I wouldn't have been aggressive. It wasn't close enough because the midpoint's right here. So you would have to be aggressive on that one, and I wouldn't have done it. And that wasn't even a trade anyway. Right here's where you would have had to be aggressive. And that's a better spot right there to be aggressive. Let me draw it for you so you can see it. Right, without having anything else on the chart. This is stuff that you guys should be picking up on. And then having the indicators right there. See, perfect spot. When that got into the oversold. That's the trade that I told you I'm going to take every time. And I went over that in the partners meeting last night too. All right, and that was it on gold. On gold, we ended up with a plus 77 ticks overall. So we had a really good day on gold. Gold was our big winner, and the ES was our smallest winner. And we spent a lot of time on the ES, and you see these lines right here? This is the midpoint, this is the top, and this is the bottom. Now, when I drew those way back here, it was based on this leg length right here, all right? For those of you guys that were there this morning, I spent a lot of time going over the ES stuff and how this ended up playing a factor. The top, middle, and bottom ended up playing a factor quite a bit as the rest of the morning session carried on. But if I go all the way back to the beginning here, we'll do all the trades we had on the ES. Right, here's our first trade on the ES. We had plus 8 on that one. Plus 12 on that, got us to 20. Things are looking good. Then we had a break even there, a break even there. Hey, I didn't count that one. Well, we had something there that I didn't count. And then we stopped out. We went from 20 down to 10. Then I got 2 ticks there to get us to 12. Break even. Then I went, this is where I was doing a lot of the talking. I stopped out twice in a row on aggressive trades. I went from 12 down to 2, and then 2 down to minus 8. And then we picked up 10 ticks there to get us back to plus 2, and 4 ticks there to get us to 6. But this morning, this leg length, I drew these levels in here on the leg length, this being the midpoint of this whole move right here. This is a trend change kind of move, is what that was right there. And it did sort of change the trend. And I was saying this midpoint is the place to look for it to pull back to, and that's going to become a relatively important area. And I pulled back here, kind of hung up, went up above it, came back, bounced off it, then chopped at it for a little while, stayed up above it, was in between here in this range, came up here to the top of the range, failed. Top of the range, failed. Back down to the midpoint, tried to bounce, failed, and right down to the bottom. Now, all the trades that we took, well, I went through all the trades that we took already. So it was, you see how it's staying in between these things? And that was all from that one point, that one leg length that we had way back in the beginning. After we finished up here, it got up above it and starting to run. So this is all good. You want to see this kind of movement. If I crunch it up, and this was something that I went over last night and this morning. If I crunch it up like this is kind of the equivalent of looking at a larger time frame. where price ran up, it ran down, it ran up, met resistance here at the top, came back down, met resistance at the bottom. So in a larger time frame, this period right here, this period right inside here, in a larger time frame, all of that would be chop, right? And then right here, it broke out of the chop, right? Because it went up to the top, came back down to the bottom. Let me do this in a different color so it's not all blue. Let me make this red. Okay, so it went up, it came back down, and then went back up, staying inside the chop. It, made a little noise in there, came back down to the bottom, and went back up to the top. And then finally it broke out of the top. Okay, right here, it broke out of the top. And so looking at this range of chop, this right here was the midpoint of that range of chop. So it broke out and then it made a leg up. So what it should do right now is this leg from here to there is what it should do right now. And that leg should go from here up to there. And when it finishes that leg, this leg here, it should pull back to here. And then bounce again from there. And let me, before I expound on this any further, let me move it over here. It should pull back to there. And by the end of the day, that is what we should be looking at, wherever that is. Okay, up here. So that's 58.46. That's just doing some rough technical analysis from this right here, right? Now, if we bump over to the daily chart, I don't know what that looks like on the daily. What number did I say that was? Right there, 58.47, 58.46. I don't know what that looks like on the daily chart, but let's just jump over here and see what that looks like on the daily chart. 58.46, 58.47. That's only up here. Okay, that's the high of the day, right? It's up here toward the high of the day. Okay, so it'd be great. What I was saying this morning is it'd be great if we ended up with a dragonfly doji on this bar, this candle that's happening right now. It'd be great if it ended up being a dragonfly doji. So this could all happen. All this stuff that I'm talking about right here. We should make it up to here and then pull back and then make another leg up. You could have that and then some. It's only 1:12. We still got quite a bit of time left in the day. And all it takes is like a little whisper from Trump to saying, I was just kidding about the tariffs and the euro. And bam, we're gonna be right up there by Monday. I said this morning when it was going down, I said now's a great time to buy call options, weekly call options like next Friday's options when it was down here. I didn't go and look at the prices at that time, but it would have been a great time to buy them right there when it was going down this morning when we were at the BBC in the morning session. That would have been a perfect time to do it. All right, it's 1:13. Let's see if we can put some trades on in here now. Okay. That was a lot of talking. I've been doing a lot of talking, it seems like. I need these 3 days off. Let my voice catch back up. All right. There we go. Let me minimize this. And there it is. So now what we'd be looking for here right now on this, let me just get rid of this drawing object here. Our pullback spot was right about here that we would have been looking for on the NQ. Now the fact that we got down into the oversold again right here, it crunches everything up on us and makes this a little uglier. Okay, not anything you really want to trade right there. The same thing with the ES. Not anything you really want to trade right there. And the Russell is actually something that you could look at for a trade because it goes from here up to here. Right, so the Russell is the closest thing I'd want to trade right there. Okay. And I'm texting Matt. But I want to say to all of you, if you're up on the day, stop trading right now because you want to have a good feeling going into the long weekend. You don't want to be kicking yourself because you gave all your profits back. Okay, especially going into a long weekend. If you're up right now.
Did you say
Yes.
something earlier about a map?
A map.
Yeah, there was a question in the YouTube channel that says, "Oh, okay, where is the map?" And
No, I said Matt. Matt.
Oh.
Matt is what I said, not a map.
Okay. All right, never mind.
I said map. Map. No, Matt. I was actually just reading it. It said after 17 trades. This was from Matt. Matt. After 17 trades, I'm up $3,555. I was letting most of them run into the swing high.
Nice.
Yep.
Good job.
But he's using a 100 by 150 bracket, so he didn't get caught up in all the noise. And so what I just texted to him is, sweet, stop trading now, take that feeling into the long weekend. That's what I said. That's why I just repeated the same thing to you guys. If you're up on the day, stop trading. Take that feeling into the long weekend. The worst thing you want to do is give it all back and then kick yourself all weekend long for giving it all back.
I'm done for the day. Except for this.
Good. Yes, I have this and then a couple of meetings, but then I'm done too. And I am. It's funny. I was sending messages to. Bert texted me yesterday, and I know he's got a Weber grill too, so I sent him pictures of my grill and stuff I was cooking yesterday. And so he's on the path to do the same thing. I should make a commercial, or I should make a thing in YouTube. I do have to redo my other grill, so I'm waiting for opportunities here to trade. Okay, this just expanded a little bit right here because we didn't make it into the oversold on this pullback. We didn't make it into the oversold, so that's still expanded. You're still using the same pull out of the oversold. So these are both looking a little better for trading. The Russell is too. Okay, so all three of these indexes are looking better for trading, and the gold is almost at 100% retracement, I think. Let me just crunch this up. What the heck? Oh, I have the context shut off on the gold. Okay. All right. So we're below here on the gold. Okay. So the gold is going the wrong way. And remove that and draw that one the right way. Okay. So the gold's about to give us an opportunity to trade too. Okay. So on this, we need a pullback. On this, we need a pullback. And on this, we need a pullback. I like that the indexes are all running up right here. This is playing right into what I wanted to see happen. Target view trades yesterday.
It's that one big beautiful bounce off the daily BBC.
A big beautiful bounce, like a big beautiful bill. No, I'm still here. I was looking at something else. This is a good place to trade on the gold right in here. Right, we're at the midpoint. This is a good place to be aggressive with the trade on the gold right in here. Okay, so I'm gonna throw on a short right here, and we pull back to the midpoint and get a down close right there at the midpoint. That's a good place to be aggressive. You're below the midpoint too, so it should make it all the way down here to 57.2. It should be a really nice trade. We need 5 ticks in profit to bump the stop to break even. We don't have that yet. It's got a 15 tick stop on it. Okay, make a window on top. Good. All right, so we're looking for deeper pullbacks on the way these are coming together right now. This is not going to work out really well unless we get a big flat spot down here and down here. The NQ is a little closer to being a better trade. The ES is not gonna. The ES is going to need a flat spot down here to get anywhere toward the point where I'd want to trade it. The Russell is going to be basically the same thing as the ES. It's going to need a flat spot down here at the bottom. The reason is that it takes 2 bars to get it from overbought to oversold. We just stopped out on that gold. It takes 2 bars to get it from overbought to oversold. All right. And well, we just got an up close here, so that stretches it out a little bit. But now a down close on this one will put you right here. That's not a good spot to place a trade right there. Right. I would want it to go a little deeper, give us a little more room to run. And we just stopped out on that gold. That was a good spot for the gold too. That was definitely a good spot for the gold.
That NQ, was that a valid short over there? No.
On the NQ, no.
Oh yeah.
Yeah, I was looking for a down close on this. Down close, a flat spot down here, and then come off the middle. That's what I was looking for.
I got you.
You know, right here, if we got the up close right here, it'd be like right here, and you have no room to go. You know, there's an argument for it because you had so much momentum right here on that last leg length. And that last leg length was, well, it was actually smaller than the leg length before it. I don't know. I'm just going to wait for the conservative trade. This is right here, the conservative trade on this, but this is not a good place to trade. Okay. Here you go. I don't know if you're in here right now. You got 20 ticks on the gold on a mistake long. Okay. Well, that's, hey, yeah, well, I had it when I didn't have the, YBR on there. I was thinking long there too, Jim. Then I put the YBR on. It's like, oh no, wait a minute. I'm going the wrong way. All right, so the way this is coming together right here, because I didn't take this, what I think is going to happen, when we get a move down, then it's going to get into the oversold, make a flat spot, get down to the middle to the perfect point to place a trade. But my rules are going to make me stop, not be able to take the trade. All right, on the NQ, we should have a flat spot here. If we get an up close on the NQ right now, it's going to be the same thing that the S is doing right now. It's not going to give us anything you really want to do. Okay, because the S on the NQ just got into the oversold. So a down close on this bar would be better than an up close to keep it in the oversold. If you get an up close, it's going to take it out. Now, this is not a place I want to trade. My stop would be right here, right before the midpoint. So it's likely to pull back to the midpoint, hit my stop, take me out, then run up from there. Okay, the good news about the ES is it just got into the overbought. So if it does, okay, but it did get into the overbought, so it could still pull back here and give us a flat spot and give us a chance to trade it. Right? It could still do that. The NQ is going to be in the same boat. Okay. If you did take the ES trade, you did have time to move your stop break even and even take some profit there. Okay. All right, so we're getting a little bit of that pullback there that I was looking for.
Yeah, oh man, I was just getting ready to say the ES was about to hand you exactly what you wanted.
Just about. If we got the down close there, then we would have been getting just what we wanted. But now it's getting a little choppy in here. So now knowing that it's getting a little choppy in here, there's a couple of ways you can think. You can be aggressive with the trend. It's too choppy to actually do this kind of trading right here. We'd short this bar right now. You could actually short it right there doing this if you wanted the blue lead into the overbought. You could short it right there, but the leg lengths are a little bit too long for me to want to do that. That's good when it's just like a 2-bar leg length. And this is a 4-bar leg length. But if I undo that right now, we'll look for it to pull back down and give us an opportunity here to go long once it gets down into the oversold. But you see what we talked about this in the meeting last night when I did it bar by bar last night. It's got us all jammed up in here right now. Both of these do. Got us all jammed up in here. This one's not as bad. This one's like that. Okay. Because it's from here to here. See where it came out of the oversold to where it went back into the oversold, the high and low in between. Came out of the oversold to where it went back in, the high and low in between. So the ES got us all jammed up. The NQ is not as bad. The Russell's the best looking one, really. It's not doing anything, but it's the best looking one. But now the gold is actually looking pretty good. Now the gold right here, guys, this has got This is the thing that changed the ES today. What's happening on the gold right now is the thing that changed the ES. Remember the whole bugle thing from this morning? We have it here right now on gold. This is it right here. All right, so far, right now you're looking at that and that and that. That's not right. Let me draw it and we'll get it in the right spot. It was pretty close. That. Okay. Mark, are you in here right now? I don't think I got your email. I don't remember seeing it. He was just texting me. He sent me an email with his trades this morning. I don't remember seeing that this morning. All right, so we're all jammed up here. We're all jammed up here. We need a pullback on. We need a pullback here on the Russell, and we obviously need a pullback here on the gold too. But the gold has now created this scenario going forward the rest of the afternoon. I'm hoping it's going to break out of all that and that not be a thing that gets stuck in. But it's 126 already. Wow, 127. So I'm going to have to wrap it up so we can get into all that he has to get into. Let me undo that. And I will show you.
I'll be moving pretty quickly, so don't worry. I'll make sure everything's closed for you to be able to do your 2 o'clock.
Okay. Here, I want to show you guys something. I was talking about my grill. See, those are all the things that are inside the grill. The Weber grill that I took apart.
Oh my goodness.
Yeah, and that's what everybody's grill looks like after 6 years of using it without changing the inside. A lot of people just change the whole grill. And this is what it looks like now.
Nice.
Replaced all the insides, and I'll show you something else here in just a second. Here.
Are you on the carnivore diet?
Well, I usually am, but I wasn't right. I am usually, but since we had this birthday stuff that we made for Jake, I kind of went off. But it was mostly fruit that I went off it on. Let's see, I cooked all those tenders yesterday on it.
My wife's been
delicious.
For years.
And the carnivore diet, look at all that bacon. I cooked that during the break. That's 3 pounds of bacon. That'll last all week now. Well, most of the week anyway. Phil eats all that, but it's delicious. And it cooked perfectly. It's like a brand new grill. And it was $65 or $68 or something like that for all those pieces. It took me a half an hour to put them in. If you do it the way you're supposed to do it, it's going to take you 1.5 hours. I figured out if you just bend 3 little pieces, 3 pieces to get the ones out, 3 pieces to get them back in, and some rusted screws that you won't have to take out.
When I met my wife 45 years ago, she was a little hippie girl dancing barefoot in Balboa Park, and she was a full-blown vegetarian. And I was just a country boy from Georgia, and she introduced me to the hippie life and to being a vegetarian, and now you heard me just say she's been on the carnivore diet for
now she's all meat. Yep. That's funny. All right, well, I'm running out of time, guys. It doesn't look like we're going to get another trade set up. So all we had was that one stop out over there on gold. That was too bad. But it does happen. Everything else has gone sideways right here. I would think, I don't know what made it make this move right here, in the last 15 minutes. But I would think we're going to see spurts like that up until the last hours of today. Well, between 3 and 4 today, probably. I think between 3 and 4, we're going to see some more significant movement, I would think.
If you've never taken the free trial, there couldn't be a better time, because we'll get your indicators indicating today. But the weekend and the holiday won't count again. Your trial won't actually start till Tuesday morning.
Right.
But you'll have the indicators for 3 days to kind of get familiar with them. So.
Yes. So to take the free trial, you go here to mytradingiq.com. You click on this purple button right here. There's no credit card required for the trial. Just click on that purple button. It will bring you to this page. Just fill it out. All right. All we ask for is your name, your phone number down here at the bottom. Give us your TradingView login ID. If you don't have one yet, click on this link and get one. Okay. That is it. With that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. And Dwayne is pulling it over now, I'm sure. Yeah, I know. I was just gonna say, and for everybody else, if I don't talk to you this afternoon, have a great, safe holiday weekend. Make good decisions, and we'll see you all on Tuesday. Right. Thank you all for coming today.
Okay, recap of the morning session.
Today it took 7 minutes and one trade to get to $1,200 with 10 contracts.
Good job.
Thank you.
Okay, all right, guys, we're going to pick up where we left off and get her done, as they say. We made it through all the markets. We were all the way up to crude. Okay, here's where crude opened last night. It's kind of rolled sideways until about 5 a.m. this morning, and then we ran up to the weekly zone above. Now, these are the zones that were published Monday morning, 6:15 a.m. Eastern. When price moves up to a zone, we expect resistance till proven otherwise. When it drops to a zone, we expect support till proven otherwise. Resistance, 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 and we're up against resistance again. But we did hit our long target, and we did hit our short target. All right, gold. Here's where we opened last night. Again, everybody had these targets 5 minutes ahead of the open. Okay. We struggled here, some wide-ranging consolidation on gold. It's kind of wild. In fact, this drop here, that's a spot where I would not have typically chosen for potential support. But 20% or less of the time, the market is going to do something other than the next high probability thing. But then once we saw red and falling turn to blue and climbing, this one candle right here opened at 33.01 and ran up 12 points, $1,200 per contract traded in that one 30-minute candle. But then we kept going, leg and a retracement and a leg and a retracement, and the step line has crossed. So this red candle here may be the beginning of the retracement back to the BBC. Goals in price discovery mode. Okay, and silver. Here was the open. We got above the BBC. We consolidated at the zone, and then we popped right up to the target. This candle opened at 33.29 and ran up 7 pennies to 33.36. Hit the target to the tick, which was based off this high right here from yesterday. That's market structure. Now, it only takes 2 pennies to get your goal for the day. So from 29 to 36, that's $350 per contract traded in that one candle. So we consolidated, we attempted to go higher, and we failed. Then blue and climbing turned to red and falling, putting us back below the BBC, and we almost hit the short target, but not quite. Came in right here. I was looking for it to come in on this low right here. So support sends the market looking for resistance. So the step line looks like it's trying to cross blue and climbing. If it does, then we'll look for a retracement back to the BBC. However, if we continue higher, right here where there's the bearish cross, the red line got below the green line and led to an extended move, and it found support right at the zone. Support sent us to resistance right at the zone. Okay, but when you have a bearish cross like that that leads to an extended move, the first time price revisits that area, which is 33.66, that will almost always be good resistance, at least the first time up. Now, does that work 100% of the time? Very few things happen 100% of the time. Does it happen more often than not? You better believe it. So as the step line attempts to cross blue and climbing, we might get one last little boost up to 33.66, and then look for a retracement back to the BBC. And that covers all the markets. And there's that big beautiful bounce off the BBC. And the reason that I think this bounce is going to hold is because you'll notice that, now see over here how blue and climbing turned to red and falling, and then we had the big downtrend. If we get a nice bounce, we've got potential resistance at the step line, at blue and climbing, at this high, at this little double top right here, and then at the bearish cross, and then this double top up here. Okay, and then the all-time historic high was put in on December 6th. So looks kind of bullish heading into the weekend. To become a member, go to mytradingiq.com, watch the videos, read the content, and when you're ready, send an email to support@cfrn.net. Tell us you want to become a member. We'll send you an email that explains what it means to become a passport holder, and there'll be a link that you can click to seal the deal. You're going to get 2 hours of live training in an interactive environment every trading day. Real trades in real time with real money, and an explanation of every trade taken, why it worked, why it didn't work, what happened. And you are trading along in your demo account to qualify to go live and asking every question that pops into your head. In the live training room, your questions are never a bother, okay? It's the whole purpose for the training room, because the best way to learn is to ask questions, obviously, once you get the answer. And because it's rules-based trading, you can ask the question today or 6 months from now, and the answer is going to be the same. It's not going to change, okay? The rules are firmly in place. Along with 2 hours of live training every trading day, you also get private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder, are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, it doesn't matter, because price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. That's just how markets work. As a passport holder, you'll get the Logic 247 alerts around the clock, the concierge trade alerts the second they're published each evening. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. And once those are published, they're carved in stone for the entire week. They don't change in any way whatsoever. As a passport holder, you'll be able to attend the members only workshop every Thursday night at 8 p.m. Eastern. And you're going to get the golden key that unlocks all the private channels in Telegram. One of those channels is the members only workshop channel. So there's hundreds of videos in there. Do you need to watch them all? No. But you can scroll through, because we always put a little caption underneath the video explaining the major talking points of that night's workshop. So you may find something of interest and you may choose to watch it. But it's a great resource to have at your fingertips. And when you become a passport holder, you've got access to everything. And when you take the trial, Michael showed you how to take the trial. You're not just getting access to the live training room. What's going to happen is we're going to treat you like a passport holder for 5 consecutive trading days. No credit card required. We don't want you worrying about money. We want you to pay attention to what's being taught, so that at the end of the 5 days, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Okay? Basically, it's everything a trader needs, all under one roof, one low price. Okay, let's wrap up this week with our good word for today. Give God all the glory. Revelation 4:10. The 24 elders fall down before him and cast their crowns before the throne. When we try to impress the people we consider to be important, we become trophy collectors. I'm more important because I know this famous person. That's how our thinking goes. And all kinds of objects can become trophies. Our grades in school, the house we live in, people we have impressed, our looks, the clothes we wear, compliments, promotions. Oh, it's an endless list. There are even websites you can visit to look for a trophy wife, a woman whose beauty is a tribute to her husband's wealth and influence. A trophy is anything you own that causes other people to look at you and say, wow. But living for trophies leaves you empty, unhappy, and tired. They bring a momentary happiness. You get a burst of endorphins, and that can be very addictive. But the enjoyment always dwindles. It's notable that in heaven, when images like crowns are used, instead of wearing them, people are casting them at the Lord's feet. When you give the triumph, admiration, and honor away, they bring you joy. When you collect them, they dull, fade, and become a burden. That's why the Bible says, the 24 elders fall down before him who sits on the throne and worship him who lives forever and ever, and cast their crowns before the throne, saying, you are worthy, O Lord, to receive glory and honor and power, for you created all things, and by your will they exist and were created. Again, that's Revelation 10 verse 11. Anything good you have, anything good you are, and anything good you will receive in the future all come from God. So make sure to give God all the glory. And that's our good word for today and for the week. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.